Hi, everyone. I'm Romi Savova. I'm the founder and CEO of PensionBee. I started the company almost a decade ago after a harrowing pension transfer experience of my own that led me to see that many people would need a dedicated online pension provider that makes pensions simple so that everyone can look forward to a happy retirement. We've been incredibly fortunate to operate in an enormous market, roughly £1 trillion of defined contribution pension assets. And that market continues to grow, and with it grows the need for individuals to prepare themselves for retirement. We have a very long-term relationship with our customers, and therefore we aim to acquire our customers directly using our data-led marketing approach that is complemented by a very strong brand awareness of the company. Roughly 1 in 4 people have heard of PensionBee and what we do. Everything is made possible by our technology, which underpins our competitive advantage. We invested in our tech stack from the very early days, and therefore we have continued to scale economically and will continue to do so into the future. Later on in the presentation, my colleague Christoph, who is the CFO of PensionBee, will introduce himself and walk you through our financial model, our unit economics, and how we generate long-term recurring revenue growth and cash flow. I hope you'll be able to see from our presentation that we are an incredibly committed and experienced leadership team. We love the company and we love the purpose that we create within the UK, and that is evident through everything that we do. Could I have the next slide, please? I mentioned that PensionBee got started after a harrowing pension transfer experience of my own. And indeed, when I left my job at Morgan Stanley in 2014, I had to transfer my own pension. And what I uncovered was a nightmare of an industry. A lot of large pension providers that don't know how to talk to their customers. They insist that you get a financial advisor. So I tried to get myself a financial advisor, but nobody called me back. They deemed that my pension was simply not worth the effort. And so I kept looking until I made my way to a large investment platform. And after filling in many, many pages of paperwork and acting like the middle person between them and my previous pension provider, the money made it over, and I was shown the menu of several thousand different investment options. I selected one that I was familiar with, and lo and behold, as soon as my money went in, the fund dramatically underperformed. I had been overcharged in order to enter. I'd paid around 5%, and I was paying 2% going forward on an ongoing basis. And overall, that was a very poor outcome for me. And I think represents many of the outcomes that are possible today within the UK pension market. So together with the CTO of PensionBee, we decided to build a simple online technology platform that would make pensions simple for everyone in the UK. We enable our customers to sign up in a couple of minutes. And as a result of that sign up, we can transfer and consolidate their old pensions into a new online plan. That plan is managed by the world's largest asset managers. We work with BlackRock, State Street, Legal & General, and HSBC, who provide the underlying investment solutions for the PensionBee customer base. We at PensionBee focus on the technology and the customer service that underpins that strategy. And as a result, we've had a phenomenal experience of growth in the past decade. Our assets under administration stood at just under 3 billion as at the end of the last quarter. And we have close to 800,000 registered customers, of which about 140,000 are invested into their PensionBee plans. That customer base and asset base generates an annual run rate revenue of about £17 million. And with our customer retention in excess of 95%, we have excellent visibility over our revenue streams and the way that we aim to take advantage of the £1 trillion market opportunity of defined contribution pension assets. Could I have the next slide, please? I mentioned that one of the key drivers of PensionBee's investment proposition is indeed the market itself. In 2012, the government introduced the concept of automatic enrollment. It's a reform that requires virtually every employer to enroll their employees into a workplace pension. And as a result of automatic enrollment, the UK's defined contribution market has grown dramatically over the past decade. In fact, the UK is the world's second largest defined contribution pension market. There's over £1 trillion of assets, and over 70% of those are considered transferable. That means that they are not currently being paid into by an employer, i.e., they are not active in the workplace. The market continues to be bolstered by supportive regulatory changes. There's a huge recognition that the state pension alone will likely not be enough for most people, and therefore the support for ongoing saving into defined contribution pension plans is incredibly strong. Combined this strong support with the impact of regular job switching. Indeed, the average person has about 11 jobs in their lifetime, means that people have increasingly left behind their old pensions and can benefit from a solution like PensionBee. And of course, as a result of this market, awareness itself within the country is growing. And therefore, even though PensionBee has grown exceptionally quickly to date, roughly doubling in size every year since inception, we still have an enormous opportunity to continue growing our market share, as we currently represent less than 0.5% of the total core market that we go after. Could I have the next slide, please? In order to understand the way that we approach our customers, it's important to understand exactly who our customers are. At PensionBee, we aim to be with our customers from the ages of 18 to 80, truly generating a long-term relationship with them. We acquire customers who are in their 30s, in their 40s, in their 50s, really any age, because everyone can benefit from pension consolidation when they have a couple of small pension pots that they've left behind, or when they're simply looking forward to their retirement, as some of our customers over the age of 50 might be. You can see the age distribution of our customer base in the top right corner. You can see that customers across the age band are represented. Some of our younger customers may join us with slightly smaller pensions, but on balance are likely to have a longer lifetime with PensionBee because they are at the start of their savings journey. Some of our older customers are likely to join with a larger pension because they've had more time to build up. However, they may also be seeking to withdraw that pension before your typical 30-year-old. And therefore, from our perspective, every customer is a good customer. And you can see our representation across the entire country and, of course, across the wealth spectrum. Because with PensionBee, our average customer has a balance of around £20,000, but the range can be exceptionally broad. Could I have the next slide, please? That broad customer base and the fact that every customer is a good customer lends itself particularly well to a data-led customer acquisition approach. We adopt many different channels to encourage our customers to sign up to PensionBee, whether those are online channels such as paid search, or whether those are offline channels such as TV and radio. Our channels are optimized to ensure that we reach the widest possible audience so that we can really tap into that mass market. Complementing our acquisition activities is, of course, a growing brand awareness. PensionBee has roughly 25% brand awareness, meaning 1 in 4 people have heard of the company. And our growing brand awareness has coincided with growing national interest of the retirement savings market, meaning that many people who are thinking about PensionBee are thinking about pensions and are actively researching their options. enabling us to acquire them as customers. Could I have the next slide, please? Everything has been made possible by our technology. We recognized very early on in our journey that in order to scale the company to the ambitions that we have for it, we would need to invest in a proprietary technology base. And therefore, we made the decision to build from scratch on cloud native platforms like Salesforce and Heroku that are already designed to handle millions of customers. And instead of focusing on things such as, what is a name and what is an address, we have dedicated our investment in actually creating proprietary pension technology. And that technology has several different elements. First, of course, is the multi-device customer experience. We like our customers to be able to do as much as possible online. And therefore, we dedicate a huge amount of time in understanding their needs and what it takes for them to serve themselves, either through our app or through our website. We've, of course, invested substantially in our consolidation technology. We make it simple for our customers to combine their pensions. Many will come to us without a policy number because they don't want to open that drawer and look for that old piece of paper that may detail some of their previous pensions. We therefore make it easy for them to sign up and consolidate with as little information as possible. We also have some dedicated relationships with large pension providers that enable that process to run smoothly. And of course, where pension providers are really stuck in the past, we've invested in paper processing technology that enables us to do things like machine read paper that arrives at our office and to match that to customers' policy details in order to effect their transfer more smoothly and at scale. We at PensionBee are responsible for the trading and administration of invested monies, and therefore we deal directly with our asset managers, which forms a core part of our technology as well. And finally, our open API makes it possible for our customers to export their pension balances in their favorite financial aggregation apps, enabling them to see tomorrow's money from PensionBee alongside today's money in their bank accounts. Could I have the next slide, please? I'd now like to introduce you to our CFO, Christoph Martin, who will take you through the financial aspects of the PensionBee business model.
Thank you very much, Romi. Good afternoon, everyone. My name is Christoph, and I'm the CFO of PensionBee. I would next elaborate first of the business model of PensionBee, thereafter cover the unit economics that exemplifies the return profile of the company, and lastly highlights the long-term recurring and predictable nature of the business. On this page, I would like to touch on the business model, which is relatively simple and best can be thought about in what we call the 4 steps of value creation. First of all, we start with the data-driven, disciplined customer acquisition strategy. And this is where we use our acquisition strategy to acquire customer and bring them onto the technology platform. So we invest effectively marketing budget to acquire customer and effectively pay a one-off cost to acquire them onto the platform. In the second step, once the customer are on the platform, we retain them, and customers increase their pension assets over time. And the retention rates that illustrates the high retention rate, so to speak, is greater than 95%. And has also improved over the last few years, and I touch on that in one of the subsequent pages. In addition to staying on the technology platform, our customers increase their average pension balance with top-ups over time as they, so to speak, save up for retirement, which translates into a cohort growth that we see in the data, which is roughly 5% on an underlying basis. The third step is turning the pension assets into a recurring and predictable revenue stream, thanks to our resilient contractual revenue margin. And we saw the contractual revenue margin be resilient over the last few years. The fourth step is to have cost discipline to improve margin. So in addition to the marketing costs, which are covered under step one, we also incur variable costs and have fixed costs. With regards to the variable costs, those are fees that we pay to our money manager partners for the asset management services. And although they are effectively variable in nature, over the last few years, we actually saw those costs coming down as a percent of revenue from roughly 25% in 2018 to now around 15 to 20% last year. The technology costs are predominantly fixed costs in nature, where we drive operating leverage as showcased of an improvement of the technology and platform cost as a percentage of revenue also over the last few years. So thanks to the cost discipline approach, we improved margin, so to speak, and have a clear path to profitability going forward. So in summary, to summarize this page, the model, we pay a one-off cost to acquire customers to the platform. Once customers are on the platform, the vast majority stay on the platform, as shown in the 95% plus retention rate, and are growing their pension wealth with the company, which is shown by the underlying cohort growth number of roughly 5% per year. Then we turn that asset base into recurring and predictable revenue streams, thanks to the resilient contractual revenue margin. And a small fee is paid to money manager services as a variable cost, and we pay for people and technology platform as a predominantly fixed cost base. If I could have the next page, I would like to cover the unit economics framework that we use to assess our marketing spend. So on the cost side, the customer acquisition costs, our KPI for that is our CPIC, where we spend roughly £250 per revenue generating customer. Then on the lifetime value side, I would like to run through a quick example for lifetime value. So at the end of Q1, the average balance was roughly £20,000 of a customer. We're generating a revenue fee of roughly 64 basis points on that asset base, which translates into revenue of £130 per year. On average, we pay then roughly 20% to the money manager partners, which would be roughly £30 per year. And then other, so to speak, servicing costs, which we quantify to be around £20 per year, would mean that the cash contribution per customer would be around £80 per year. Assuming the retention rate of 95% plus, which implies a 5% churn rate. If you inverse that, would mean a customer stays with that particular number on the platform for roughly 20 years. And if you multiply the £80 per year with the 20-year duration, gets you to roughly 1,600 of lifetime value. And if you divide the lifetime value over the customer acquisition costs, showcases that PensionBee generates attractive returns on that marketing investment. If I could have the next page, please. We wanted to share a little bit more data around what makes the business recurring and predictable in nature from effectively customer perspective and the company perspective. So the average customer of PensionBee is in their late 30s and building up their pension wealth, so to speak, on the platform up until they are eligible for accessing their pension pot at the age of 55 plus, while we see a lot of customers even after that point are still increasing their pension savings as they are still in working for a company. So that translates from a cohort perspective in the following dynamic, that as we are spending marketing, we acquire a certain customer cohorts onto the platform. And given the high retention rate of 95% plus, and here at the top top right of this page, we're showing the exact retention rate, which we reported on at the end of last year, which is close to 97% and has improved. So thanks to that high retention rate and thanks to the fact that customers are still saving up for their retirement, we actually see those cohorts to grow on an underlying basis over time. And we see that dynamic across cohorts and across time. And what I mean with that is in 2021, in the financial year, if we're looking at the underlying cohort growth across all cohorts, we, for instance, saw increase in the cohorts that we acquired in 2016 and 2017, which is the shaded layer at the very bottom, and also 2018 and all of the layers, so to speak, that are above that one. So we see them across cohorts, even for the ones that we acquired very early on. I would like now to hand back to Romi to cover the executive team and our ESG focus.
Thank you very much, Christoph. So as you can see, we have a true passion about building out the scale of PensionBee, and our team has been with us for a very, very long period of time. I started the company together with Jonathan Lister Parsons, who's the CTO of the company. And soon thereafter, we were joined by our Chief Design Officer, our Chief Operating Officer, and our Chief Marketing Officer. Our Chief Corporate Officer and our Chief Financial Officer, Christoph, and I were actually previously at a different company together, and so have a long history of working in a similar fashion. And so with our wonderful team, not only do we aspire to and have been building an exceptionally fantastic business, we also have an exceptionally purpose-led culture. If I could have the next page, please. We are exceptionally proud of our achievements on the environmental, social, and governance aspects of PensionBee. On the environmental side, we were the first mainstream pension provider to launch a fossil fuel-free option for our customers, enabling them to invest their pensions in a way that excludes fossil fuel producers and services that actually serve fossil fuel producers. We launched this fund in response to overwhelming feedback from our customers that they wish to have this type of option when investing. On the social side, we are very proud of our gender balance that we have achieved across the organization and of the various other metrics of diversity that present themselves in us having the kind of employee base that also reflects our customer base. And we're proud to disclose our numbers, as you can see from our score on the Workforce Disclosure Initiative. And finally, as a premium listed company on the London Stock Exchange, we have a true commitment to corporate governance. We knew very early on that we wanted to be on the stock exchange, and so have invested in an independent board and in governance structures since our inception. And that concludes our presentation for today, but we would love to see if there are any questions from the audience.
Absolutely. Thank you for that. We have a couple of questions already submitted, but as a reminder to everyone, you can do it via the Q&A function at the bottom. Let's begin. Well done for being pioneering with what I believe was a direct listing. Beg your pardon. The institutional take-up was limited at the IPO. Can you clarify which institutions came on board at the time? And was he right in suggesting take-up was limited? And what do you expect going forward in terms of liquidity?
So we actually had an excellent reception to our IPO. We did float on the high growth segment of the London Stock Exchange because our free float was less than 25%. And the reason for that is that the management team and the board still have a strong ownership stake in the business. In fact, collectively, we own about 45% of the company, and so are very motivated to keep growing it. On the institutional side, we had a particularly strong reception from investors who are focused on growth, but also investors who are focused on long-term value. I'm not sure if I'm allowed to disclose exactly who came on board and in which proportion at the IPO, but one public disclosure at least has been made since then, which is that Norges, the Norwegian government's pension fund, had increased its stake in PensionBee to about 3.5%. And prior to that, we had and continue to actually maintain State Street as a large institutional shareholder on the cap table as well. We are now listed on the premium segment of the London Stock Exchange, and we expect to continue seeing that institutional support for the share base increasing over time. Thank you for your question. I hope that answers it.
Thank you. Perhaps you could say a little bit around the premium listing and the consequent benefits that you are seeing from that upgrade.
Yes, so the high growth segment is designed for companies, as the label says, that are very high growth, but also that want to maintain a free float of less than 25% in the short term. We had always said that the high growth segment listing would be followed by a transition to the premium segment as our free float increases, and also as we intend to pursue indexation strategies for our share ownership. So as part of the premium segment, a company becomes eligible for inclusion in the FTSE series. And based on various performance factors, we are very much looking forward to that inclusion in the not too distant future.
Thank you. Okay, back to the business and the nuts and bolts. In terms of the choice of investment fund options for your customers, are there plans to include active managers in the future, or do you always see it as a pension platform of passive funds?
That is a great question, and I'll answer it by explaining what drives the investment product selection. The investment product selection is driven by customer demand and what it is that customers want, and also by very specific pension outcomes. So the 7 products that we have on the PensionBee technology platform are designed for very specific and different investment objectives and purposes. Our default plan, which is the tailored plan, enables our customers to invest differently throughout life. So when they are in their 30s, they are more likely to be invested in higher risk and therefore higher growth assets, such as equities. And when they are in their 50s and 60s, that asset allocation will gradually shift to a greater allocation towards bond investments. And so the default plan automatically adjusts itself as our customers go through life. For customers who want to make a different investment choice, we also offer 2 responsible plans. The first plan is, as I mentioned, the fossil fuel free plan, which was the first mainstream option of its kind in the UK and was launched in response to customer feedback. And we also have our Sharia compliant plan. So that covers 3. The other 4 plans are plans that are geared towards retirement. So our customers, when they are thinking about retiring, will have different objectives. Some will want to withdraw from their pensions regularly. Some will want to purchase an annuity in due course. Some will want to reduce all volatility. And yet others will simply want to pass on their pension to their beneficiaries. And so the other 4 options that we have are very much in line with these broader objectives. Right now, we are in the market for an additional plan. We have actually had feedback from our customers that they are looking to make more impact-led investments and to specifically invest in companies that are making a positive impact on the world and not just excluding some of the more challenging corporate actors. So we are actively looking for an option of that kind. But as always, we will be led by what our customers want and will respond to those needs. So I would say watch the space.
And in that instance of the policy that includes less challenging corporate actors, I like that, I'm going to use that. Would that be an active or a passive fund?
It depends on what is available and the price point, but we don't tend to exclude certain investment types just because they are of a particular type. What we really look for is a balance of meeting the customer's needs, of course, of the pricing point, and various other characteristics. So, very, very open to different types of plans as long as they meet the objectives that we've described.
Okay, thank you. Question here, the chart shows the chart showing the customer base by age is very interesting. Do you disclose the same chart by assets under administration as well as by customer numbers?
So we do not. We disclose according to customer numbers, but what it is fair to say is that the average 50-year-old or 60-year-old, because they've saved for longer, is likely to have a bigger balance than the average 30-year-old or 20-year-old who may have just started on their automatic enrollment journey.
Okay, thank you. A little bit on competitive landscape, please. How do you see your differentiating points versus other online competitors such as Nutmeg? And I suppose I received an email myself the other day from Hargreaves Lansdown.
Excellent question. Each online service provider offers a different proposition. So in the case of robo-advisors, of which Nutmeg is an example, the core value proposition is really about investment management and asset allocation. We, of course, work with external asset managers who undertake the investment management on behalf of our customers. And therefore, our proposition very much centers on making it easy for people to manage their pensions specifically. Unlike virtually anyone out there in the market, we are the only pension provider who is focused on pensions. We dedicate all of our resources to making pensions simple so that everyone can look forward to a happy retirement. Whereas with other companies, you may be sort of offered other types of services, other investment approaches, other savings wrappers. We have that true dedication to the pensions market in particular, and of course to making it simple. Versus the investment platforms, which you mentioned, one of our ease of use is certainly exemplified in the consolidation journey. So making it easy for customers to bring their pensions together. It's also exemplified by the fact that we don't offer several thousand different investment options for individuals to choose from. Again, we believe in making things simple. And I would say increasingly one of our core differentiators is really around customer service, because we believe that if you're making pensions simple, then you must also be delivering a good customer service for when a customer has a question and wishes to get in touch over the email, over phone, or over live chat. So I would summarize by saying we are truly focused on pensions. We focus and specialize on making them simple and easy to invest in, easy to understand. We offer excellent customer service to support that. We have a curated range of investments. And for all of those reasons, we believe that we are the #1 choice for customers with a pension in the UK.
Well, we're out of questions, but I think that was a brilliant way to wrap up what are the key messages that PensionBee bring. So thank you both for your time, and we look forward to hearing from you. I think trading update comes up next month, so we shall hear more from you then. Thank you.
Indeed. Thanks for having us.